Hi, good afternoon. It's Carol Harmer from Chandler Trading, Chandler Charts again. I've been around for a while, been back in the UK, but I'm here today. Now, to be fair, nothing was going on until very little time ago. So it's going to be quite exciting about what we're going to go on and do in this next month of July. Um, Now, we know that the markets are really quite quiet around the July, August time, but I have to say, I think this one could be different because we've had quite a slow start recently, going into May and June, it's been really dire. So let's have a look and see what we would like to discuss. Um, does anybody want to look at the euro? Okay, we'll look at the euro then. Is anybody there? No? Yes? Okay. Right, so if we put up the daily chart of the euro, we can see all the things that I like watching, the and the moving daily average. Now, the important thing about this is this. As we went into the beginning of May, you can see where the market made a key reversal day. Okay? And we did that on the 8th of May. You can see where we tried to touch it. Now, what we did, this area here, we made a double. Now, I know that what we should do is say, well, look, the right-hand top should be less than this one, but markets don't always react like that. And we had a key reversal day. So the move lower should not have been unexpected. Now, if we put on the fib retracement level, we can put it from there to there. Actually, it's a bit. Well, you can see it a bit clearer now. Now, the important point to know about this particular chart pattern is the fact that we also broke, and although we went above this slightly, we have gone back and we've stayed back below the 200-day moving average. Now, this average is really important to any market, but it is very important, more so in the spot market than other futures denominated markets. Now, if you look at this pattern here, you see where you've got the little double top, didn't reach back above the 38.2. So what I'm expecting this to do now is to come at least down to here, which is 134.5. Okay, that will be my minimum target. Now, this should happen by at least the end of next week. So any rally at all from the 50% level at 135.5, any rally, as long as we hold below that 136.5 area, we want to be selling the euro. Okay, now you can see where your natural stop reverse is. You've got two. You can put a stop above the 200-day moving average, which is at 136.72. Okay, so you could put it above this high here, okay, which is at 136.76. So if you gave it 136.80, you could sell out, you could cover any short position and go long for a move up to 137.15 to 137.20. Okay, but by and large, any rally even up to that bit there, here, you still would like to be selling. If you do a fib retracement on this, you'll see my point. It's unlikely, under current market circumstances, that we can actually break that 50% line. So we still want to be selling the euro even if we break back above the 136.75 area, AZ. Okay, so that's where we are with the euro. Now, obviously, if we look at the cable, okay, you can see these on. You see how cable's turned already here, okay? Now, if we know now that any rally back towards these levels, and I'm thinking around about the 170.5 area, any rally at all back to there, you want to be selling, okay? The market does look really, really toppish at the moment, okay? Probably sterling is one of the strongest currencies out there at this time, but it's still not looking brilliant, and we still want to be selling into any strength that we see. We look at that on a weekly chart, you see how it's rounding off, and it really is only if we break through 170.70 that, you know, we're going to look again. But at the moment, everything's quite nice for the sterling to come down. Now, the interesting thing that's happened so far this week is the reversal in the S&P and the Dow. Now, if we look at this particular chart of the S&P patch, if you look here, you can see that we diverged greatly on that day, okay? Now, you had a very, if you look at these two little points here, you had very, very narrow range. You know, it just didn't want to go. Then we had that big key reversal day, tried to get up, couldn't break this little bit here, and down we come. Now, where would we go now? This has been a long time coming, I have to say. And there have been times when I've been like, is the S&P and the Dow ever going to reverse? Well, yeah. There are a few sayings that we have in the market, and it's one of them is sell in May and go away. Now, that didn't quite pan out this year, as you can see what happened in May. It just went higher and higher and higher. And once we broke through this, then we had to keep going up. Now, we were using Fibonacci extensions and pivot points to try and gauge the resistance level of where it would go, what it would do. We managed to get there in the end with it, but it still is looking very, very toppy at the moment, and we are on course for a key reversal week, even though it's only Thursday. We'll have to have a look and see what tomorrow brings, but I do think that it's going to be messy, and I do think the market has been waiting for this to get short of it. And you know, there's been some horror stories about, hi John, yes, the fund is growing, thank you, we're doing fine, hope you're okay. So that's where we are with the S&P. If you look at the Dow, we can see the same sort of pattern. We didn't have a key reversal today, we had a double top, same sort of thing. Exact same sort of thing though as other stock markets. Definite divergence here, definitely coming down. Okay, I mean, definitely, but you know, I think it's gonna definitely. I think we've seen the top in that. Is that good for gold? Yeah, it should be. Now, what used to happen? Yeah, Forex Girl, it is hard to trade that when there was no known resistance. But I have to tell you, okay, what you do in situations like that, you do your Fibonacci extensions and you do your pivot point analysis. All right. And the reason for that is that that's the only thing that people can go by. You can draw trend lines, you can channels. You know, if we put a channel on here, it will tell you what the top of the channel is. So if we look at that, we can see there that the channel, the top of the channel is at 17.15. It's that sort of thing that we're looking for when there are no known resistance levels, okay? This isn't a majorly big pattern, but I think it's going to be enough for the markets. Yeah, it is tricky. It is tricky. But that's why you don't really trade something like this until a pattern develops. Because you can see it there. You can see as we come down, back above that average, straight up. Are we going to break that? 1697. There you go. We didn't break it. Okay, we really didn't, just by a fraction, but not even worth thinking about. It is defiant and it is on negative news, although I have to tell you, as you all know, I am not a fundamental trader, but I have to say, even I am aware of the fact it is not great news. But the trouble with it is when you get into a strong bull market and you break previous highs, you know, the market gets sent away with its own momentum. So that's another reason why this accelerated up. Now, once you saw the key reversal day in the S&P, once you saw the double top in the Dow, you're limiting your upside risk because you're quite happy to sell here and your stops would be slightly above or above that trend channel, which quite a way away if you're trading a retail platform, I have to say. Can I explain a 3-day correction? Okay, what we do with a 3-day correction, also lovingly known as a dead cat bounce. What happens is, if you see the market come off quite a bit, okay, pick any of these, but say mainly this one, this is where it didn't work out. But this is the type of thing. A market will have a sharp move, higher or lower. Right, higher or lower. And then what happens for the next 3 days, it has a technical correction. And what we call that is a dead cat bounce. It was 1, 2, 3. If that had been a top, down we go. So we may well hold this trend line here and have a 1, 2, 3 up day and then go lower. So it shouldn't last for more than 3 days. It's on the 4th day that the market will go back to what trend it was originally in. So if you hear somebody say a dead cat bounce, it's the same as a 3-day correction. Okay? Now, with these stock markets, I think they really are going to go lower. I've looked at the divergence. I've seen it. You know, it's not looking strong to me at all. And I do think that if we can break through this trend line support, which is down at the 1668 area, if we can break through that, then I do see it coming quite a bit back quite quickly. We can put the Fibonacci levels on. There's your double top. There's your first. There's your first Fibonacci level, which is coincidental of the 55-day moving average. It's around, that's at 1660. So we're around that sort of price. So that's what we're looking for. Breakdown through this trend line support down to here. Now, if we hold this trend line, Forex Gal, here, that's when you'll see this 3-day bounce. I would suggest, I really would, that I don't see how the stock market can be at these higher levels technically. I really can't. So I don't think that we're going to go back and break above 1700 on the Dow. I just don't think we're going to. I think markets naturally go lower in the summer. Don't ask me why. I've got no idea. People squaring their books before going on holiday, whatever, you know. But normally the place for the stock market in the summer is definitely played from the short side. Okay, so that's what we're going to be looking for. We're looking for any bounce to sell it. Now, somebody's asked me about gold. Very interesting market. Does anybody want to ask me about anything else to do with stock markets? apart from the FTSE, because I don't do it. No? Okay. Gold. What a little star. It really is. It's possibly one of my favorite markets, to be fair. Right. Now, you can see everybody's getting excited about gold. Everybody, once gold went through the 1305 level, people jumped on the bandwagon and everyone started buying gold. And there's a reason for this. Yes, usually what happened was, as the stock market went down, gold followed. But it isn't. It isn't doing that now. It's doing complete opposite. So although here it was doing really not very little, very, very little, okay, once we made that break, you saw the stock markets come lower, and you know why. I just don't like the FTSE. I don't know why. I just never did. So I don't look at it. I look at the others. I don't look at the FTSE. I just don't like it. Anyway, I think it's probably, if the truth is but told, when I went to, when I used to work on the life floor, I wasn't very keen on the FTSE traders. So I didn't trade it. That's probably what it was back way back then. And also, when we first started on the floor, FTSE didn't move. I mean, it really didn't move. So anybody that wanted to trade the stock markets, we all used to trade into the States. So that's just carried on with me. You know, it really has. So that's why I like trading the Dow and the S&P, and I also quite like the NASDAQ as well. Sometimes that can be a bit of a leading indicator, the NASDAQ. So I like that. I like gold as well. Now, look here. See where we've stopped here at 1331 is the high. And we've been to 27, nearly 27. So if we put a level on here, okay, you can see that really only above that 61.8% fib level is where you would want to be going long of gold. See the stochastics, look at them, they're turning, okay? So in hindsight, it would be better to buy gold around the 1305 area. You'd be out of gold now. At the moment, I would be looking to sell into strength at the moment in gold and only change my mind above 1335. I've just done the euro, Sharon. Do you want me to come back and do it? But I will do the Aussie because that's also a little star. But I've just done the Aussie euro. I've just done the euro. Sadly, that was my first one I did. Now, does anybody trade gold out there, or are you just looking at it in conjunction with other markets? Cool. So what you're going to be doing then, fantastic. Yeah, futures is fine. I do futures off spot. It doesn't matter. You know, there's only a little bit differential in the spread. Yeah. All right. Right. You know, don't you? Okay, Sharon, I'll come back to the euro just after I've done the gold, but I will. Well done, Pan on Fire. Fantastic. Okay, so that's where we are in the gold. We want to be selling up here because we need these to correct. Okay, we really want them to come back to more manageable levels. Even if we only hit the 50% level, it's good enough. Okay, for us to be able to say, okay, we've corrected, and now we can go up higher. Now, as you all know, I've always been quite a liker of gold. From the, I'll just take them fibs off for you. I like gold overall, okay? I think if you hang that out, I've done enough on the downside at the moment. I really do, and I can see no reason at all why we can't go back in gold to 1380, hopefully 1400, okay? That has to play out though. It's not confirmed yet, but I'm just saying you have got a double bottom on the weekly chart. We haven't been able to break down below here. It has broken back up above 1305. So everything's set for the gold to actually keep going. The price is above all of the weekly moving averages, okay, except for the 200 week, which really we don't really care about at this point. You can see the weekly stochastics have changed to bullish, okay. So yeah, 1330, between 1330 and 1335 is gold resistance, absolutely. So if on this leg higher, that's where you want to be selling gold, around 1330 to 1335, 1334, stops above 1335. Okay. Overall, if you look at that chart pattern, you can see that that wants to go higher. Okay. It may be that in the daily charts we're too overbought. We need to correct. We need to come back down to 1305, hopefully 1300 level, and then I think we're going to see buyers back in the market once more. So if I just, are we all done on gold or not? Cool. For Sharon, let's just go back on the euro, okay? All right. So, as I said prior, I'm just going to briefly go over this, Sharon. Right, we've made a double top on the euro. We've had a clear reversal down the euro. Yes, I think the euro's going lower. I think the minimum target we're going to get 134.5, and that's going to be next week. And I think also that we can go quite a bit lower on this. I don't think any reason to get overexcited about the euro. The chart pattern's negative. You know, all right, we've got stochastics at neutral levels, but you know what? The euro's been neutral. Okay, so now we need for the market to come down. I can't see any reason why it's not going to. If we put that little trend line on here, and remember you need 3 points, you can see that we did break it today, okay? And I think, yeah, it's always worthwhile to trade the euro crosses. They are good. They really are. I quite like the euro crosses, the euro yen, euro sterling, euro Swiss. Well, the euro Swiss, we know is a buy at 121. You know, because the Swiss National Bank tell us. So, you know, hey, we do that. No, you can't be nervous about the euro. Why would you be nervous about the euro? And on fire. Why would you? It's fine. As long as you know where your stops are. Yeah, it hasn't though, has it? Look, it's gone down. It's not gone up. It's gone up a little bit. No, but we've only gone up 150 points. We've gone down 5 big figures, 500 points. So markets don't go in a straight line. It will never, ever go in a straight line. Lost a bit. Maybe what I find with the guys who I deal with the retail market, they're looking too short term. And I think that's when you can get a bit hurt, is when you go so short term. You've got to know where the daily trend, you've got to know what the daily chart's doing. Otherwise, you're not going to be able to trade around the core structure of where the trend is. So, for example, look at how it come down from the key reversal day. That was your first clue. That's when everyone got short, you know. So when it came down, I mean, we did go down to 135, you know, quite quickly. Although you did go in little steps, we still went down quite quickly. This is looking only a correction up at the moment. Once we come back below that 200-day moving average, I think the writing was on the wall, frankly, and this is where technically we have been selling the euro. Well, Draghi, bless her, the thing is, markets will move short term on fundamentals. You know, I'm not going to say they won't. I don't look at them because they change their mind every minute of the day. Euro fundamentally has to go down, as you say, interest rate outlook. Yeah, I mean, it does. But, you know, people don't want the euro to go down. That's the problem. They want the euro to remain quite strong. Don't ask me why. No idea. But, you know, I don't think you're going to get away from market forces. And the market forces at this moment is the fact that they want the market to come lower. So this is what we're going to do. We're going to be looking at places to sell. We're going to be looking at that 134.5 resistance. You know, when you're wrong with the euro, you go above that 200-day moving average and you're wrong. So it's a really good backstop for people selling up at that 135.5 level, which you've been able to do quite happily most of this week. Okay, so that's where we were with them. Is that all right for you, Sharon? Oh, Sharon. I think so. Yes, the Aussie. That's it. Okay. Now, little sucker's got you, hasn't it? This last couple of weeks, it has been absolutely amazing. It really has. Right. There's your base pattern. Did everybody see that inverse head and shoulder? Okay. Now, I'm absolutely sure that the last time I was on, I wittered about this. I did witter. Okay. And I did say Aussie's going to go higher, which it did. I went away April and we did go higher, and then we come down. But look where we came to and from. It is quite amazing. You see all this along here, okay? I mean, I know the levels anyway because I can zoom right across. So because this is something I trade quite actively, I know where the levels are. But your natural stop on buying Aussie was below the 200-day moving average. We were so close to it. We got down to this 92, 02, 05, 08 level, okay? And so the stop was only at, I think at the time I bought the Aussie, was around the 91.70 level, about the 91.70, 75. So you had that natural 25, 30 pips stop loss to gain 300 points. I didn't. I have to say I did get out before that. But my rationale behind it was, of course, if you're making a 3-to-1 ratio from a trade, you've got to sit with it. And I did sit with this Aussie, and it did cause me some grief at times, but I sat with it and I ignored it and I put it away because I just was so sure that the market was going to go higher. Now, the interesting point to the Aussie is this. We do have this double top here, but look, from this point, and we've only been in the last couple of days, look how much these stochastics have eased, okay? They really have. And the market actually hasn't gone anywhere. If you look at this, where it says the market should go lower, okay, we didn't. We haven't gone lower. It's been bid up. It really has been bid. So that tells me, and now we're back towards neutral levels. Now this tells me that I think the Aussie is going to make a break higher from this pattern here that we had, okay, which was an inverse head and shoulder. The actual measured target for that is 96, okay? So, of course, they're not going to go up in a straight line. God, wish they did, but they don't. And in a bull market, you're always going to be slower to get to your objective than you are in a bear market, which is why traders prefer trading short. So any level down to 93.5, 93.30, we're going to be buying, okay? Because we know that there is support at 92.75. I know that. And that's quite a nice risk-reward ratio looking for 96. So any dip down, especially as we've gone nowhere and these have come down so much and they're now looking to turn bid off of quite neutral levels, it says to me, even though there is a double top on the charts, just says to me that this pattern should take precedence over that pattern. But to be sure, to be absolutely positive, you can, I mean, still buy weakness, okay, because we could still stick around in this sort of range, but to cover up towards here and then buy once we break that 94.65 level here, okay? So you can cover and then go back into a long position once 94.75 breaks. Once that does that 65 breaks, give it 75 just to be sure. Once that breaks, then you're on a one-way header for the next level, which everyone's got in their head. I'm not the only one that's seen this inverse head and shoulder pattern. I'm really not. And the measure target from that is 96. So you can sit back, you know, and it'll be nice and playful, I think, this one. Now, my only concern would be if sterling and the euro start to tank, because it is a currency, although it's a commodity currency, it may keep a lid on it. I don't think it's going to go down as far as the others, personally. I just don't think it does. If you overlay all the charts, you can see that they although they're all against the dollar, each individual currency has its own little pattern. So I think we'll be all right with the Aussie, especially as gold looks like it could trade quite a bit higher. So I preferred gold and oil for the Aussie rather than what the euro and sterling's doing. But if they start to shank, then we could have a bit of a nightmare on it. Okay? But as I say, we know the levels on there, so we just go back in and buy it on dips. I don't think there's any reason to actually think we're heading for a bear market on the Aussie. I just don't see it. You could sell Euro Oz. Yeah, you know, let's have a look at that one. I looked at the Euro Yen. Yeah, see, that pattern looks very similar to the Euro. This bit, I'm not talking about the whole thing, you know, obviously a good thing to sell Euro Oz from like day dot. But let's have a look. See, the Euro Oz does look under pressure, I have to say. There's no reason at all. You can see here, this is the midpoint line, all right, what we call the midpoint line. If you can see from when the market turned bid, it's corrected a lot on this, done nothing on this. So you do have a natural sell area, even here at current levels. I honestly do think that the Euro Oz could well be one to go into. Look at this head and shoulder top. Oh, go away. Head and shoulder topping pattern here. So if just, you know, very, very general, 1, 2, 3, 4, 1, 2, 3, 4. There you go. That would be your measured target. So it would incorporate that low there at 140.5. We would incorporate these highs and lows over here. So yeah, we're at 144.5 now. It's a good risk reward to sell the Euro Oz. You know, if it goes above 144.80, you know, maybe you don't want to be in it at the moment, but you look again to sell at that moving average resistance of 145.37, but you do it in front of that, you go on a 145.20. Yeah, I do think that 140 level is like screaming out to be, come and get me. So because of the way the stochastics and the RSI have worked out over the last few days, well, the last few weeks, you know, a week and a half, you can see that even with these bottoms here, it didn't make it. On any correction, it just got sold. So, and I think this could be the start of the move on that Euro Oz trade. So I would go with it. In fact, I'm going to go with it. Okay, I am. I've been doing the Euro Sterling and the Euro Yen. But the Euro, and you don't want, obviously, too many Euro-based contracts, or not contracts, markets, in case you get a bit of a knee-jerk reaction, unless Draghi comes out and says something horrific, you know. But looking at the short sterling and the Euribor contracts farther out down the curve, you can see the red months and the green months are all calling for interest rate hikes. In fact, if you look at next December, the futures have already priced in 2%. So, you know, the euro could really come under pressure, okay, if they do. Living in Spain, I am seeing, although it pains me to say, I am seeing a turn, and I haven't for the last 5-6 years. Cranes are starting working now. Banks are starting to lend more money. I do, well, of course I'm bothered about the Middle East. The chart does look toppish. Funnily enough, I'll do that. I'll get that chart up now. But you know what? There's always been tension in the middle. Has everybody finished with the Euro Oz chart? Yeah. Cool. But that would be one to go. So let's have a look. Yeah, oil, a little dear little love, really. It does look toppy. It's got a double top, you know, but look at the moves. It is in an uptrend. Yes, of course, there is tension in the Middle East, but you know what? There's all been tension in the Middle East, and it's always been oil driven. So what do? Do you know, you can't worry so much about the Middle East in reflection to the oil price, because it's going to do what it's going to do anyway with whatever. It just is. That's the way it is. So you just have to look at oil and go, do you know what? You look like you're coming down. You've double topped. You've got bearish stochastics. You know, the RSI isn't too bad, actually, to be fair. But with this topping pattern, at least you could get a knee-jerk reaction back towards the 104 level. And then we look again. What's it going to do at 104? Is it going to break? Is it going to break through that first Fibonacci retracement level at 103.29? You take it from there. But at the moment, today, you would be looking to sell into any rally or sell on the break of this, which is at a 105.25. Okay, so anything below 105.25, you could go back into the market and sell, because you know that the oil traders are going to get on the back of it and they're going to drive the price lower. Okay, so easily you could get 150 points out of oil, which will be very, very nice. Yeah, I know. I didn't either. And do you know what? The thing why I didn't is because I bought oil. I bought oil when I was in England, around about here. Okay, and it went up and it went down. I thought, oh, you know, will it, won't it? And then when it got up here, I thought, take your profit. And then as I took the profit on it, it just went through the roof. And you just sit there and you just go, really? Really? Why? It was like that. As soon as I hit that button, the world bought oil. Now, I know you shouldn't be greedy, but to be honest with you, it went so quick, I didn't really want to go back in it. I really didn't. It's just like, no, that's it, leave it now. You've missed it. But, you know, with oil, the one thing about oil is sometimes you do, most of the time you do get another bite of the cherry with it. It's unrealistic that it will just keep going, you know. So you've got these two scenarios of where, yeah, down on fire. Yeah, me sorry too. Anyway, you get these two scenarios where it gives you the option to sell. So you'd be selling up to 106.5. Okay, we want to go just in front of today's high, or we want to sell below 105.25. Okay, good risk reward trade. Can't see any reason why that wouldn't work out to be a winner going into next week. Right, now I've got 5 more minutes. So would anybody like to ask me any questions, or want me to quickly look at another market for you? Before I go and sunbathe, yeah? Anybody? Dollar yen. Dollar yen. Looney? The dollar yen. My little horror, aren't you? My little horror. I actually said to one of my guys today, you can go buy some dollar yen. It's at 105, 101.80. So as you can see, probably I'm not the best person to ask for the dollar yen at the moment. Okay, now we have broken below this 200-day moving average. It doesn't look overly good, but unless we break here, I am going to stick with buy it. That's what I'm going to stick with. But as you can see, it's not a million miles away from where we are now. And I think if we start to break through 101.40, then there's every chance we're going to come back, and we're going to come back to here, 101.80, and even lower. I mean, I can't see any reason at the moment until it's holding ever so nicely. But I can't see any reason if we do stay and break 101.40. I can't understand why it would bounce back up. I think once the break has been made, and although we broke the 200-day moving average on the dollar yen way back on May the 21st, we actually closed above it. No, it's the same. Well, banks and brokers. Yeah. But I tend to stick with the same ones now, because they all do the same. Years ago we used different ones, but now we use the same, really. Same guys, because they trade everything. They really do. If you're going to do a big position in the spot market, it's probably better to go with a bank. I know you can't if retail, but you could go with a bank. That's what we do for the fund. We go with banks for that, and brokers for everything else. You know, it's easy. And also we got our own trading platform as well now. Well, we will have at the end of July. So we're going to be launching that at the end of July. So really we won't need to do anything. It will all be done. I mean, we'd have to sit, well, obviously we have to sit there and do the platform, but it won't be like going through brokers or retail platforms or banks anymore. We'll be able to do it direct. The one thing it's going to have is liquidity, which is going to be a good thing. Right, guys. Otto, I'm not sure it'll, 10080, yeah, 10050. Yeah, it may well bottom out around there. But look, I mean, look at the dollar yen. It's just gone sideways, hasn't it? So if we look at a weekly chart on that one, it has just gone sideways. So we should move quite a good way soon. Markets don't go sideways forever. They just don't. And you can see that that one has gone sideways for a good few months now. Okay? So we're about to change our fortune on the dollar yen. I just hope it's the day I bought it. But hey ho, what can you say? Right, thank you all for joining me. And happy trading the next month. And I'll catch you again next month. Thanks. I will. All right, guys. Thanks, guys.